Thanks for joining us. It looks like another positive start to today's session in Australia. The US was relatively flat, but again, we're seeing energy prices spike. It looks like that's going to be good for our energy sector. What are you expecting to be the major movements as we work through today's trade?
Well, the biggest thing probably after the bell was Apple's earnings coming out and being shy of expectations and lowering some guidance going forward, with the stock dropping about 8%. And I know a lot of people watch Apple, so in terms of a systemic basis, that could take things down a little bit. It was interesting because the US equity futures were trading positive just after the close and up until about 7 a.m. this morning, and then they faded a fair bit, and then over the last 20 minutes or so have rallied to be in the green again. So at first I thought that the Australian equity, the SPI futures were going to, point to that 20 points up. It might give that back as the US equity futures had come back somewhat after the SPI futures had closed. But we may actually see that positive 20 points or so to the upside on the Aussie market today. And as you say, with the oil complex having rallied as hard as it did, that would be the driver on the Aussie market. But on a systemic basis, I think that the market's a little bit concerned with levels of the US equity markets in terms of the earnings that are coming through. So that might cause some systemic headwind for the markets, but on the commodities basis, we should see a decent surge.
Okay, let's turn to the other critical issue in the commodity space for us here in Australia, and that's the iron ore index. It's down 5%. That means it's down something like 10% off last Thursday's peak, where we saw it pop above that $70 US dollar level. Can I ask, we've heard Goldman Sachs in particular raise a concern about the level of trade we've seen in the Dalian iron ore market, suggesting it's just out of whack considering even annual figures, something like 400%. What do you think's going on here, and are people starting to get a little bit nervous that this recent rally that we have seen is unsustainable and there could be a dramatic pullback?
Well, I think the analysts here, in terms of where Goldman Sachs are at with looking at the fundamentals of iron ore, suggested that the recent push that we've seen, those open interest and open contracts trading through on the Dalian exchange in Singapore for the iron ore futures, has suggested that there's a lot of participation coming from the Chinese retail investor, and a lot of those positions are closed out by the end of the day in terms of the actual contract. So the open interest doesn't change so much during the day, but what is changing is that there's a massive spike in the volume. So that is suggestive of people participating in an upward momentum in iron ore. Right. And without the sustainability of the fundamentals behind it, we may see the iron ore index come back a bit. So as you suggest, that move that we saw with the iron ore index having come back from the highs of last week, we've got to remember that we did get a very rapid move up into that level after we went through that March high, retraced somewhat, and then took out that March high to go to 63 odd, and then for a spike up through 70. So for it to come back and settle down about 62 is probably reasonable, and there may be more to go in terms of if momentum does pick up, that the Chinese retail futures traders of the iron ore on Dalian actually step out of that market. We could see it come back significantly, and it's all about momentum at the moment.
Extraordinary. So we're basically seeing the Chinese momentum retail investors move away from maybe just general stock picking, moving straight into those commodity space. Extraordinary times. Let's look at the Aussie dollar, because we have seen it firm slightly overnight off the back of a weaker US dollar. We have inflation numbers out here, and we have the FOMC meeting to come tomorrow. Are you expecting the inflation, our inflation numbers could have a marked impact on the Australian dollar, or is it really just a US dollar story at the moment?
Well, overnight the move with the Aussie dollar was more about US weakness across the board against all of the majors, and obviously we've still got Brexit hanging in the background as a major issue for the pound, and the Aussie dollar has weakened against the pound a little bit over the last few sessions. The more to do with the Aussie dollar will be that CPI data, as you say. That's fundamental today. So if we get an uptick or an increase in where the CPI is expected to be, then you could see Aussie dollar get back up. We spoke last week about the Aussie dollar hitting that resistance level at the 78.30 level that it couldn't seem to get through. I don't know whether you remember that last week.
I do, yes.
It was interesting because, we've seen a fade since then. We dropped below 77 just ever so briefly, now to sit at the 77.5 mark. So we're only about 80 points away from, going back towards that 78.30 odd high, and strong CPI data would suggest that we would push up towards that level. It's obviously a lot less likely, given strong CPI data, that the RBA is going to have room to move to the downside, and in terms of the interest rate. So that would be supportive of Aussie dollar. A weak CPI print would probably see Aussie come back down and trade below 77 as the big figure.
Right, an interesting week in currency moves. Now, we know how big a week it's been for corporate news in the US and economic news. We have a huge week next week. We have banks releasing results of 3 out of the big 4. We've got a budget being handed down, and we have a Reserve Bank decision. How do you think that affects volumes this week? Do we see a lot of changing of positionings, do you think? Is this a case where a lot of people will pull their money out to sit on cash just to see those results? How do you see the momentum building?
Well, in terms of the volumes, I mean, on a stock-specific basis, when you see something like an Apple as an example, you'll see, a heightened volume in the stock, and that's around the as I say, the stock-specific nature of that. So, with the FOMC coming up with the minutes of their meeting, and there is very, very little probability that they're going to do anything with interest rates, but it's more going to be about the verbiage around that. That will be a driver on a systemic basis to actually, either backstop or create a headwind for the equities markets in the US, which again is going to carry over to everything else. Now we've got the Bank of Japan coming in the day after, and what they're going to do in terms of stimulus. So and obviously they're going to have to increase monetary stimulus. How they go about that's going to be the other thing. So the Aussie dollar will face volatility with those 2 big meetings coming out from the 2 majors there, and then obviously as we roll into next week with our earnings, it's going to be more on a stock specific basis. Love to see something come out of the Aussie banks where they have a lower proviso for bad debtors, like we saw with Standard Chartered last night, and see the massive rally in that. So it's interesting when you see a stock surge so much because they've got less of a proviso for bad loans. So is that good or is that bad? Well, it's a hard call on that one because they've obviously made a proviso out of concern in the past, and that concern may be waning, so that could be something that we see out of the Aussie banks, and if that being the case, then we see the Aussie banks trade higher.
And James, we've got a question without notice, I apologise, but on the overseas banking results that we have seen, you've pointed to Standard Chartered as was also, I spoke to an analyst from the US yesterday, was saying Citigroup's only running on a multiple of, say, 9 at the moment. There's just such a lack of appetite to buy into that financial space. Has there been anything you've seen coming from overseas that you think is an indicator of what we can expect from the Australian banks? And we do have a different economy, obviously much heavier weighted in the commodity space and very reliant on housing as well. But is there lessons to be learned, do you think, from the results that we have seen overseas that give you some guidance on what we can expect next week?
Well, with that, I think that it's going to come down to the systemic nature of things in terms of the overall earnings coming through in the US, and as you suggested, the commentator had said earlier that on a price earnings basis, the US banks are looking inexpensive at 10, 11 times or even sub 10 times earnings. But what you've got to also look at is the growth. So when you look at it on a price to earnings to growth ratio, so put it on a PEG ratio, the PEG ratios can be high because those growth expectations of both the earnings and the revenues going forward are lowered. So the PEG ratio actually increases. So it's easy to look at the PE ratio, but I think you've got to take into account the growth as well. So if we get the forward-looking growth numbers that we want to see out of the banks, then the PEG ratio is something that is lowered, and even if the price earnings are going up, as long as the growth's there. So there's just a lot of moving parts in there for us to factor in and see how it happens.
A lot to digest, but it keeps us both in a job. Thanks so much, James.
Absolutely.
Give it a break.
Okay, have a good...
This is Market Countdown, and when we come back, we're going to be looking